are looking at a chart of Bitcoin handily outperforming the S&P 500 over the past year, up 187%. That gain catching the attention of investor Peter Thiel, whose Valar Ventures is doubling down on crypto with its Series B investment in crypto wealth management company BlockFi. And the founder and CEO of that company, Zach Prince, joins us at Post 9. Welcome, Zach.
Hey, thanks for having me.
So BlockFi does what? You're trying to do traditional banking for crypto? How does that work?
That's exactly right. So BlockFi builds financial services products for crypto investors. And today we have three products that are live. One is an interest account where you can earn 5% interest on your Bitcoin, 8.6% interest on your stable coins, and we also support Ether and Litecoin, which are in the top 5 by market cap, but don't have as much market share as Bitcoin. We were the first company in the space to offer loans to individuals that own cryptocurrency, similar to what you're able to do when you're borrowing against a portfolio of stocks, except with Bitcoin and Ether and other crypto assets as collateral. And our most recent product that we launched in December is the ability to buy and sell cryptocurrency for no fees whatsoever, moving it closer to the traditional equities market where trading is largely free, which we launched in December.
So I think that sounds appealing, to put my Bitcoin with you and then get a pretty high interest on that. But is it safe? I mean, are you regulated? How do I know that the money is safe?
Yeah, great question. So we're regulated like traditional fintech companies. So Square, for example, SoFi, for example. We have a money services business registration at the federal level and lending licenses and money transmission licenses at the state level. There is more risk here versus a savings account with FDIC insurance or a traditional brokerage account with SIPC insurance, but you're compensated for it with the high yields. And throughout our entire history as a company, we've never lost a penny across any of the lending activities that we do.
I was going to say, what's the delinquency rate on something like that? Isn't it dangerous?
It's zero. So if you look at securities-backed lending, margin lending in public equities, which is what's most comparable to what we're doing, number one, you're always getting liquid collateral when you're making a loan to someone else. So we might lend you 50 cents for your dollar of Bitcoin that we custody and hold throughout the duration of the loan. And then we have a proprietary risk management system that automates the notifications for margin calls and the liquidation of assets in the scenario where there's volatility in a direction that requires us to take those actions.
Why do I need loans in Bitcoin if you can't buy really anything in Bitcoin?
Well, it's an investment asset. So I think there's this misconception because of the term cryptocurrency that the use case for Bitcoin is people spending it. Actually, it was the best performing asset of the last decade in terms of investment returns. And most people in the US aren't buying it because they want to spend it. They're buying it because the price goes up. And so one of the things that happens if you bought Bitcoin at 1,000 and now it's 10,000, for example, is if you sell it, you have to pay taxes on a $9,000 gain. A loan from BlockFi enables you to get liquidity without selling your Bitcoin, so you still hold the potential future upside in that position, and you have extra cash that you can use to make other investments, pay down higher cost debt, start a business, etc.
Well, one of my buddies gave me access to his entire account, and you can see here that he has a pretty sizable portfolio here. I recommended this platform to him a few months back, and he's been using it ever since. And by the way, guys, I do offer consultation services. So if you're interested in these lending platforms or lending products, you can access my consultation services through Patreon. I'll include a link in the description below. And since my friend is relatively young, I recommended a certain allocation to him, and I'll be disclosing that allocation shortly. But I know many of you guys out there are inclined to think that these lending platforms are scams. But in my view, I'm pretty confident that BlockFi isn't one of those scams. The entire space during 2017 was plagued with high yield interest product scams. So I can understand why people are very reluctant to send their funds to platforms like BlockFi. But for one, people who are running scams don't show their face on mainstream media for interviews. Also, there's a lot of reputable groups and individuals who've invested in BlockFi. You have Fidelity, you have Winklevoss twins. You just heard that Peter Thiel, his venture company Valar invested just recently. You have SoFi who invested, Coinbase Ventures invested. Given the reputability and the credibility of the investor group, I can say with high conviction that this platform is not a scam. And let's say you're one of those people that's not very optimistic about the outlook of Bitcoin, or maybe you just can't stomach the volatility. you can still take advantage of the services offered by BlockFi by depositing your USD and earning a yield of 8.6% on it. I've published a recent review where I show you guys one of the easiest ways to get your USD onto BlockFi. I'll include a link in the description below, but you can also access that video by clicking the upper right hand corner of your screen. And compared to banks, you can see that the rates for USD are pretty large. And the added bonus is that the interest compounds. So whatever you earned the previous month will earn interest the following month. And before you guys decide to deposit any Bitcoin, Ethereum, Litecoin, or USD into BlockFi, make sure you guys check out this page, blockfi.com/rates, because it tells you the limitations of depositing and withdrawing your assets on the platform. Also, depending on where you reside in the United States, they do impose limitations on which crypto pairs you can trade. So make sure you guys check out this page before signing up to the platform. But since I live in California, I have access to all the pairs. And if you live in California or any of these other states listed here on the webpage, then you should also be able to access all the trading pairs. So part of the motivation for choosing this platform to custody my friend's assets is because not only can you earn interest on this platform, but you can also trade, which is pretty unique because most other lending platforms don't allow you to do that. And on top of that, you can also take out a loan. I've published videos in the past talking about how I use Bitcoin collateralized loans to diversify my portfolio. If you're interested in that, make sure you guys click the upper right hand corner of your screen and watch that video in its entirety to learn what my strategy is for diversifying my portfolio using a Bitcoin collateralized loan. And you can use the loans for various purposes. You can use the loan, for example, if you wanted to diversify your overall portfolio, not into other volatile assets. Maybe you wanted to keep your exposure to Bitcoin without selling it and producing a taxable event. And you can do that by getting a loan on BlockFi. Let's say you have $100,000 worth of Bitcoin. You can apply for a loan here. And when you apply for the loan and you do a loan to value ratio of 50%, they'll give you $50,000 for the $100,000 in Bitcoin that you deposit. This confers two big benefits to the individual borrowing the funds. Number one, it's not considered a taxable event. Number two, you keep your exposure to Bitcoin. If you decide to take out a loan and you have a bullish outlook for Bitcoin, by getting out a loan through BlockFi, you get to keep your exposure to Bitcoin. So this means if Bitcoin's price doubles and you end up having $200,000 in Bitcoin, all you have to do to get that Bitcoin back is return the loan amount that you gave, and then you'll get your Bitcoin back. This service traditionally has only been available to a handful of privileged people who, for example, would give up their stock or equity as collateral and take out loans. They would then take those loans to purchase real estate. In an environment where the banks are printing money around the world, these privileged investors were able to exercise some leverage and leapfrog their peers. If you have any inquiries about the loan option here, make sure you express those inquiries in the comment section below, or you could join my Discord channel by messaging me on Twitter. I'll give you complete access to that channel. In my opinion, it's a great forum for you guys to chat with like-minded people and get all your questions answered and addressed. Again, if that's something that interests you, just reach out to me on Twitter and I'll give you full access to the Discord channel. But the feature we're going to focus on for this video is the trade feature. And the reason I like the trade feature on BlockFi is because they've managed to find a way to pool liquidity across multiple providers. This way, you'll be getting the best market price that's available. And on top of that, they don't charge any fees. Rather than having my friend purchase his Litecoin and Ethereum on Coinbase, I actually recommended my friend to buy his crypto on the BlockFi platform. But before I proceed and buy the crypto assets and tell you why I'm buying, let's go over the return multiplier effect. So imagine that you invested $1,000 into Bitcoin and you deposited that Bitcoin onto BlockFi. Currently on BlockFi, you can yield 5.1% on the Bitcoin that you deposit. That means in a year, you'll get $51, but for the month, you'll be given $4.25 paid to you. But let's say the following month, the price of Bitcoin has doubled. Your rate is still 5.1%, but since now your Bitcoin is worth $2,000, the interest paid to you is going to be worth $8.50. And that's because the price of Bitcoin has doubled. But it doesn't end there. The interest that you earned the previous month of $4.25, since it was paid to you in Bitcoin, that's also going to be worth $8.50. Lastly, since you bought Bitcoin at $1,000, even though the yield is currently 5.1%, your yield based on your cost basis is actually 10.2%. This is because you invested $1,000 and the price of Bitcoin doubled and you're being paid $8.50 every month. Because of your cost basis of $1,000, your real yield is actually 10.2%. To me, the analogy that works the best is imagine buying gold before they took the lid off the gold standard. Imagine buying gold when it was, let's say, $30, buying it on a weekly basis and earning a yield on it, even if it was 3 to 5%. If you did that for 30 years, you would have easily outperformed the S&P. So if you're a Bitcoin bull, you're a Ethereum bull, you're a crypto bull, it's a no-brainer to use BlockFi's interest account product. And since part of their yield is earned by these loan products, it's a pretty safe and reliable yield because the loans are over-collateralized. So when people are taking out loans, as I mentioned earlier, if you wanted to take out $50,000, you would have to put up $100,000 in Bitcoin. So if the individual borrowing the funds ever decides to default, the lender will always be made whole. And Zach Prince said it himself. Since the inception of BlockFi, they haven't lost a single penny. And if you guys didn't know, they actually custody with Gemini. And the only reason I'm mentioning all this stuff is to reassure you guys that your funds here, relative to other platforms, are pretty safe and secure. Gemini launches firm to ensure its own crypto custody branch for $200 million. And the reason this is relevant is because whenever you send your money to BlockFi, it's actually being held with Gemini custody. And in this article, it states that Winklevoss Gemini Exchange has launched an insurance company to cover up to $200 million for Gemini custody, reportedly the largest amount for any crypto custody service in the world. And this move is consistent with the Gemini's approach of being security first, compliant first, and regulatory friendly exchange and custodian. Again, this basically reinforces the point that I was making earlier that BlockFi is one of the safest, securest, and most compliant lending platforms out there in the market. So now I'm going to show you guys exactly what I plan to do. My plan here is to take $3,000, $1,500 of it I'll put in Ethereum, and $1,500 of it I'll put in Litecoin. Now let me explain why I'm doing that. Originally, I had planned to put a lot more, but it took my friend a while to get this account fully funded. My plan was to go in a lot heavier. I had originally planned to put 5,000 in Ethereum and 5,000 in Litecoin. But given the huge move that we just had, I'm a little reluctant to go in very heavily. But given the current market structure, I still think there's some potential for some more upside. But given that there's a chance I could be wrong about that, I just wanted to have some additional cash in case we get a pullback. And the reason I'm deciding to put money in Ethereum is because we have DeFi that's taken off in a big way. And by the way, folks, if you like DeFi, I've done 3 videos on DeFi so far. I strongly recommend that you guys check them out by clicking the upper right-hand corner of your screen. But the main primitive used in DeFi is Ethereum. That's the main collateral for all the protocol. On top of that, there's tentative plans to introduce staking in June of this year. And on top of that, recently miners have been holding on to Ethereum pretty tightly. They're typically sellers, but they've been holding on recently. And by removing all that ETH off the market, it produces a lot of supply pressure. And that supply pressure results in massive moves in the market, as you've guys seen here. And also on top of that, you have a large developer community. It's a highly distributed network with a very good incentive model for network upkeep. So because of those reasons, I've decided that this portfolio needs some Ethereum. And when it comes to Litecoin, because of its ubiquity, it's basically on every exchange. It's supported by various platforms. I think those reasons and certain properties that it has warrants a small allocation in everybody's portfolio. I understand the main criticism is that it has no real use case at the moment, except for being a test network for Bitcoin. Now, I'm going to push back on that just a little bit. I wrote this article rather than going over all the reasons why I think that Litecoin could develop a use case. I'm just going to link this article below in the description. You guys can read it in your own free time. In this article, I basically go over how a use case can develop out of certain properties. And if you want to know what those properties are and how I foresee a potential use case developing out of those properties, I recommend you guys check out that link in the description below and read this article in its entirety. If you decide to buy some crypto using the BlockFi platform, to do that, all you have to do is click on trade, select the crypto that you want to pay with. So we're going to pay with USDC and we're going to receive Ethereum first. So here you type in how many Ethereum you want to buy. And one feature hopefully they improve on is, let's say I wanted to buy 1500 ETH. I wish they would have done that calculation for me or let me pick USDC instead of ETH here. So that way I could put that I want to buy $1,500 worth of Ethereum and it would buy it for me rather than me having to calculate it on my own. So I'll go ahead and buy 5.65 ETH, which is approximately $1,500. Review trade. I'll go ahead and submit that trade. Click close. And you can see here at the bottom of the screen that I've purchased approximately $1,500 worth of Ethereum. I'll go ahead and do the same thing for Litecoin. Now, after buying the Litecoin, you can see that my friend's portfolio has been updated. And you can see here that my rate for Ethereum is going to be 3.6% and my rate for Litecoin is going to be 3.8%. Now, before you guys do this, just remember that these rates are subject to change, which is pretty healthy because you want the platform to remain financially viable. And to do that, the rates are going to remain dynamic because they're basically responding to market demand. In fact, if you saw the rates just the same or they were stagnant, more likely than not, it's an indication that that platform is doing something wrong or that's not sustainable. But some of you may be wondering, well, Crypto One Stop, BTC earns you 5.1% and Ethereum and Litecoin earn you a much lower rate. Why not just put more money into BTC to get that bigger yield? This way you can really take advantage of the return multiplier effect. But in my view, I think Litecoin and Ethereum have the potential to outperform Bitcoin. Let's say, for example, let's say ETH outpaces the growth of Bitcoin. I mean, we just saw it make a huge move up. Let's say the price of Bitcoin doubles and the price of Ethereum triples. In that setting, your yield in reference to your cost basis would be 10.2 for Bitcoin and 10.8 for Ethereum. And as I mentioned earlier, the rates are subject to change. If Ethereum gets locked into DeFi protocols, it's used in staking, and is being bought up and hodled by a lot of different investors, not only will that create volatility, which tends to be pretty good for interest rates, but that scarcity of Ethereum could lead to a higher yield as well. And on top of all that, let's say that you want to cash out a little bit. Or maybe you think the market is going down and you want to hedge yourself a little bit. BlockFi, if you go to your account profile and you click here on interest, you can actually choose the flex option. This allows you to get paid in the currency of your choice. So let's say that you anticipate a bear market is coming up. Instead of getting paid in like interest, you can elect to get paid in USDC. This way you can get your distribution in fiat, and as the prices go down, it'll one, help insulate your portfolio from all the downside action, but also if you have that fiat as the market is going down, you could use that fiat to take advantage of market discounts when they present themselves. And the great thing about BlockFi is that they're going to be adding more features and services in the future. In fact, they just got a lot of money. They got $30 million, which I anticipate will go towards product development, or at least some of it will. And obviously, if he's going on CNBC, he's looking for exposure. It sounds like they're ready to take this to the broader market. And one feature that I'm really looking forward to is something that BlockFi's CEO talks about in this AMA. I'll go ahead and end the video by playing that clip. But before I play that clip, I just wanted to remind you guys that I'll be publishing updates on this account every month. I'll let you guys know exactly what I'm doing and what I plan to do. If that's something that interests you, I strongly recommend that you guys subscribe. and click that notification bell so you guys can follow along and be notified when I publish those videos. If you have any questions, make sure all your inquiries are expressed in the comment section below, and I would greatly appreciate it if you guys would give me a like. With that being said, I hope you guys enjoyed this last clip. This is Crypto One Step signing out. I'll talk to you folks next time. Bye.
How is the new credit card going to work?
So imagine that your American Express, where you get membership reward points, or your Citi card where you get cash back, works the same way it does now. It's denominated in dollars, you're spending dollars. You don't pay anything if you're not carrying a balance every month in terms of a cost to you as a consumer. But instead of membership reward points or cash back, you received a Bitcoin cash back based on every purchase that you made on the card. So we're swapping out Bitcoin for the traditional rewards currency in cards. And that'll be, when we bring it to market, this will be the first time something like this has ever happened in the crypto space. So there are some cards and payment products in the crypto world right now, but they're all debit cards where you're spending your Bitcoin and there's conversion fees for every transaction, and it's a tough value prop for consumers, especially in America, where we typically get paid to spend money on our credit card.